Good morning, everyone. This is Brad Matheny. Today is the 24th of October. We're nearing the end of the month and we're getting much, much closer to the elections. Now, before we get started this morning, I want to remind everyone that back over here on Monday, right in this area, right here, let me draw a line. I warned everybody Monday morning, right here, that we were going to enter into a very difficult period with my SPY cycle patterns and the market. I interpreted the SPY cycle patterns for this week with the two counter trend modes, which we're dealing with the last part of it today, as very rotational, very volatile. I had been recommending that traders move to 80 to 85% cash in the weeks before the election or before this week, which means pretty much all through this area. You should have been positioning yourself into a more heavily cash position, preparing for the volatility heading up to the election. And the purpose behind this was to alert you that, you're going to run into very limited opportunity here over the next, call it 6, 7, 8 days. And I was very clear in my analysis and my predictions that I thought that this week and next week are going to be very difficult for traders. I'm going to continue to stick with my original prediction, which is that we are going to see a rally up into Monday, Tuesday, maybe into Wednesday, topping out probably somewhere right over in this area. Remember, we've now shifted a bit lower with yesterday's move and the move last week. So kind of a rally from here, maybe up into here by the end of the day today, maybe a little higher on Monday, and maybe rotating up into this area by Tuesday, Wednesday. I'm not expecting a massive rally. And of course, yesterday's gap breakaway was to the downside, not to the upside that I expected. That happens, especially when we get news that hits. We had Boeing news hit, we had technology, still trying to dig into why technology was selling off so hard. But we're moving into a what I call a low liquidity phase of the market. And what I'm calling a low liquidity phase of the market is traders are naturally pulling away from risk factors. We have, 8, 9, 10 days before the election. Traders are not actively engaged in trying to pick a side right now. They are pulling capital away from the market. And yesterday's news was very indicative of a panic washout type of low. So here you have the panic washout type of low, which may revert back up into this area as a kind of a rally phase, moving back up into this area. So now my estimates, my expectations, my belief is that we are going to base off of this area and attempt to move about 2 to 2.5% higher. We're already up 0.5% this morning. We're already trading at 581, and we'll see how it plays out. But that means that we could see maybe another 2%, 2.25% higher, probably up into the 592, 594 area before we get into the end of the month. That would be Wednesday, October 30th. So we're really looking at this phasing cycle off of this rotational low. And now this does set up an excess phase peak pattern. So you can see here, we've got this pullback. We're going to move into what I would call flagging, and then we're going to see if we can try to get above this level. I'll show it to you on another chart. Let's see if I'll open up another chart and show you. Now, intraday, want to talk to you guys about this. When I make my analysis and I make my suggestions based on these daily SPY cycle patterns, these are essentially telling you what the patterns are interpreting and what I think they mean. And again, these are not random patterns. These are based on Fibonacci price theory. GANN theory, and Tesla. It's called mechanical resonance theory, which is an energy cycle theory. If you need to really know more, you can go check out Rodin's vortex math theory as well, because a lot of what I do in this lookup feature, this inference engine, is related to Rodin Vortex Math. And again, that's Rodin Vortex Math. So again, it's not random. These are predictive patterns that have gone back more than 5.5 years to identify the best setups. And again, as I continue to refine them and refine the features, they will continue to improve. Right now, we're looking at warning on the short-term trend, still bullish on daily, weekly, explosive price trend in a long-term bullish. We're looking at a breakaway today. This is a counter trend breakaway. Given where we're at, that we've seen this downward cycle trend, a counter trend move to me is to the upside. I've learned that when we start getting into these counter trend modes, it's very indicative of the very short term move. So looking at the last 2 or 3 days, we've been solidly downward. So this should hypothetically, hopefully, be an upward trend. So now remember, as we move into this Thursday, Friday mode, we're moving into a buy cycle off of this low. Okay, that would be the low this morning, off of a buy cycle potentially into the rally lasting into Monday, Tuesday, Wednesday, potentially being the peak. And this is where again I'm warning everyone to prepare for and hedge against downside risk. I believe this area, this yellow area, which I can actually shrink down into this area, is the area where you need to be looking to prepare and hedge to the downside. I think it's very important for you to understand that you should have been at 80 to 85% cash at the end of last week. That means you've got very little active investments in the market. You should have prepared for the volatility this week, just like I warned on Monday. And now we're looking at a last little potential blip of about 2 to 2.5% to the upside, maybe. And this was my move here, 3.5% from way back over here. But I'll change this to 2.5% now, because it's really only about 2.5%. And we would be looking for a topping pattern right in this area. Call it 590 to 594. Okay. Then we move into this consolidation on the Wednesday, October 30th. We should get a consolidation downward type cycle, and then we get this breakdown. Now, this could move, early. It could happen a bit early, but I think, given the cycle patterns, we're moving into this next week. We get a rally tomorrow. We get a top resistance in carryover on Monday. We get a counter trend gap defender. I mentioned this yesterday. We could probably get a gap through this top resistance. Then we get a gap up higher on the 30th. And that's in trending mode. Then we get consolidation in carryover mode. That's on Thursday, the 31st. Then we get this big crush pattern. Crush patterns are typically to the downside, and that's on Friday the 1st. So understand that the crush pattern here on the 1st is this first bar right here. That's the crush pattern, and that will likely be our downward trend. So we would look for, ideally, we would look for hedging in this area, either on Monday, Tuesday, or Wednesday. You want to try to protect for downside risk, which would be hedging against a downside move. Now, there's lots of things you could do to hedge. Take a small position in inverse shares. Take a small position in the VIX, betting that the VIX would go up. You could get some put options on, for example, the SSO or QLD. There's lots of things you can do to hedge. And again, you can hedge for next to nothing. You can pull, 10, 15-day options when the pricing is right. Get, a couple of options for, maybe 100, $150. and hedge to the downside. Just make sure you give yourself, at least enough time to play out through the election. You're looking at maybe 5 to 7 days, because I think we're going to get a good solid base and roll out of the election here. We'll see how it plays out. Like I said, each new day we get a little bit more information here, and like I said, I've already got the data going over many months. So okay, I don't want to waste any more time here. So we're looking at a base, we're looking at a rally. Remember, Monday and Tuesday. Okay, sorry, this is Thursday and Friday. Today and tomorrow lead us into the Monday time frame. Sorry, this is Thursday, this is Friday, this is Monday. So Friday, Monday, Tuesday of this week and next week should be very close to the top, maybe getting a little higher on Wednesday here. But again, I think by the time we get into Wednesday, we're going to be looking at about the end of the move to the upside. And again, maybe only about 2.5% higher from where we're at right now. So be aware, you should be trading very small positions. You should be hedging, preparing to hedge. And remember, I have intraday solutions available to traders. I got to be careful of what I say, but when you saw a big move like this yesterday that went counter to my predictions, you need to start using your own skills and intraday analysis to be able to go ahead and trade this. Can't really show it to you based on TradingView rules, but I'll just leave it there. That if you really want to message me, and I'll tell you about them. Okay, let's go over to the QQQ. We're looking at the same type of recovery again here. Try to rip through these real quick. Here's a QQQ. Look at this. We're already opening up at 493. We're up a full percentage point after yesterday's big move. So look at this, big selling, right? Down 1.5%. Okay, wow, what a day. Actually, we're down 2% at the middle of the day, 1.5%. But look where we're going to open. We're going to open roughly right here, maybe a little higher. So it wipes out that entire move. And again, that was panic selling yesterday. That was news. And again, my patterns cannot predict news. What these patterns are, not to get too crazy about it, but these are characteristics based on Fibonacci, GANN, Tesla energy theory, and Rodin Vortex Math. Okay, that's the basic constructs of what these are. They are built around an inference engine. An inference engine is a modified version of AI. It's basically designed to take a look at inferred knowledge and inferred data and to try to make a determination, a prediction of what is most likely to be the pattern. And then we use these other trending systems and biasing systems, as well as the trending, expected counter trend, carryover, trending mode, to try to tell us what's likely to happen. Now, these again are characteristics based on price. Okay, historical price action. Doesn't look at news, doesn't look at fundamentals, doesn't look at earnings, doesn't look at horoscopes, doesn't look at stars, doesn't look at anything like that. It's just price, which is my belief that price is the ultimate indicator. So these are what I call characteristics of the market. If we eliminated the stars and the horoscopes and the news and the earnings and everything else, this is pretty much what price would be doing on a characteristic basis. Think of it as, all right, well, we should be rallying if nothing gets in the way. We should be getting a breakaway in counter trend mode if nothing gets in the way. We should be getting the top resistance in carryover mode if nothing gets in the way. And the way I explain that to people is you get up and you have a schedule, you want to get your coffee, read the newspaper, have your breakfast, say hi to your kids and your wife, go to work. That's your normal schedule, right? Okay, so you get up, you start your day, and you get a phone call. Your grandma's in the hospital and it's potentially terminal. What happens? Your whole schedule goes wonky. And now you can't rely on anything that was your normal predictable day, which are these patterns. That's what happened yesterday. You had an unusual set of news events that created a panic selling event. And just like grandma in the hospital, your day changes. Your week may change because of what happens. So we have to be aware that these news events, these outlier factors can disrupt my cycle patterns. Okay. That's really what happens. So now we're kind of playing into this mode. Remember yesterday I told you QQQs would sell off? Well, now we're kind of looking at a rally. We're back up in this area. We're probably going to try to move up into this 500 area today. I would assume we're going to get a pretty strong recovery rally after yesterday. Remember, the data and the economy is still clicking right along. So we're not really having any real major concerns for a crash yet. Everything is still clicking right along, in my opinion. So let's watch. Like I said, we're moving into, if you take a look at my cycle patterns right here, we are moving into a nice little moderate rally phase. And given that we have this deep low, we're opening back up here near 493. I would suspect the 497 to 500 area would be clearly in play today off of a big recovery rally trying to break to new highs, which would be an excess phase peak flagging to new highs. Okay, I don't want to run too long here, so we'll go to gold. Gold has had the same thing, panic selling. I mentioned this yesterday to my subscribers, but I've kind of shown it to you and I've made comments about it. But when you get hypothetically SPY, QQQ, gold, silver, crude, transports, and that's really, I mean, you could add financials, but when you get all of these moving down in a concerted effort, meaning every single one of them yesterday moving downward, and they all did. I didn't check XLF, I can, but every single one of these were moving aggressively downward yesterday. And this is a pretty good sign that you're getting into either some type of a panic selling mode where assets are just being pulled out of the markets, or you're getting into some sort of a early crash mode. These all tend to collapse when we get into a market crash mode. So, when you see a downward move like this, where they're all moving downward, you got to be cautious and you've got to be aware that you could be looking at either a panic move because of news or some global crisis event sending the markets downward. So we had that yesterday. I'm calling it a panic move. We're right down at support again for gold. Gold is attempting to move up above 2,800. I will tell you that. We do have consolidation in the gold pattern today. So come back over here. Here's the gold pattern. We do have a nothing bar in bullish trending. We had a breakaway yesterday, which did happen to the downside, obviously, not to the upside. So we are looking at consolidation here. After this big breakaway news event, I would still suspect that gold is going to attempt to move back up into these high areas and then continue to rally up to 2,800. Now, remember, you've got that peaking pattern setting up around the 30th to 31st of October on the SPY chart. To me, that means that we're going to see gold move. Now, remember, 29th, 30th, 31st, we're going to see gold move up into this area, potentially 2,800. This should be 2,800. 2,800 to 2,840 by roughly the 30th, 29th, 30th. I think we're going to get a good solid rally. Remember, we're going to run into some resistance right here. Try to make this light so you can see it. We're going to run into some resistance right here around 2772, roughly 2770. Then I think we break out and rally strongly up above 2810, 2815. And then we start to peak in this area around the 29th, 30th. And by roughly the 31st, we should be rolling downward. Now, remember, right here on the 31st, we get that top. On the 30th, we get the gap potential on the 31st, and then we get that stall revert flush downward trend right before the election. And then here, right before the election on the 5th, you see we get this rally. We'll see how this plays out. This could be some sort of relief rally. or some pull, some real, pull back to the upside. We'll see how it plays out. So silver should be doing the same thing here, should be pulling back off of this deep rotation. You can see we've had the deep rotation here. And we are kind of in a flagging pattern. Oop, don't know what that was. So I'm glad you guys are liking the excess phase peak patterns. Like I told you, that's the one pattern that I think everybody should know. So here's the excess phase peak pattern flagging. We came back down into the consolidation range. This is the consolidation range here. It's very clear that we got the breakdown. This is not the ultimate low. This is 1, this is 2, breakdown 3, moving into consolidation here, 4, looking maybe at an ultimate breakdown here, which would be 5, or we get the rally phase back up out of this mode, giving us that breakaway above this consolidation or peaking pattern range. Now, from a broader standpoint, look, we also have a big flagging setup here, okay? So from a larger standpoint, we are now looking at a broader excess phase peak pattern setting up, moving into flagging right here. So this is a bigger, broader pattern. And we would want the consolidation phase to continue to move higher based on my analysis, breaking above this $35 area, maybe getting up to this 36.50, 36.30 area. But then again, we have to be aware that we are now in potential flagging. A breakdown of flagging and a breakdown of 33.74 would indicate that we are now seeking the yellow, and again, this would be the yellow ultimate low down here somewhere. That's the shorter term pattern, but we would also be seeking the breakdown into consolidation in the purple pattern. So these are layered. You can see we have the peak moving into a very short-term excess phase peak pattern here in yellow. We have the breakdown into consolidation right here. That's the light blue. Then look, we have a bigger excess phase peak pattern moving into flagging, continuing into flagging right now. Have to stay above this level on the consolidation and the flagging level. That's 33.71. If we're going to get a breakout, have to stay above this 33.71 area, call it 33.70. Otherwise, we're going to get a breakdown, possibly down to this 32.75. I see a very high likelihood to move to the upside, given what we have going on, moving up into this area, and then possibly moving into some new excess phase peak pattern up in this area, setting up a high about 36.50. And again, Bitcoin. Bitcoin is still in that consolidation range. Remember, I suggested yesterday, I'm going to go back to daily because it's clearer on the daily, that we are going to stay in this consolidation range until we get that breakaway. I know that people, whatever, you don't like my charts, find somebody else. We're going to stay in this consolidation range. And as I mentioned to you, we're going to consolidate within this red bar and get rid of some of these other lines. We're going to consolidate within this red block here, which is about equal to the length of the flagging of the excess phase peak pattern. So again, I'm looking for a breakaway somewhere over here near the election, right around, maybe Sunday, Monday, just before the election, trying to get into some sort of a either breakaway to the upside or breakdown mode. What I would expect at this point, after this big deep pullback right here, is that we're going to try to probably rally back up into this 68 700, 68 900 area, and then roll back down sideways. So I would expect maybe that would be a $1,500 move to the upside, maybe call it $1,000, $1,200 move to the upside, stalling back down into the 66,700 area, right around this rejection point. And again, you know, if I come in here and go to 1 hour, you can see that we had this very clear rejection points. Remember, rejection points are where price tries to rally and break from. So let me make this very light. Here's another very clear rejection point. You see it tried to rally above it and rejected very clearly. We have another little rejection point right here, very close to the other rejection point right over here. And then we have another very big key rejection point right up here. And of course, let's go ahead and take a look at the downward rejection points. We have a rejection point right here, very key rejection point, and you can see how price rolled down. I mean, aggressively rolled down and then rejected off of this level. We have another rejection point right here. And then we have a whole host of rejection here. Now, when you get hosts of rejection, I start looking for rejection in groups. So you can see here, these two kind of lined up pretty closely. I'll mark this here. And then you can see how this one and this one lined up very closely with this one. So keep active. I knew that was going to show up. And that's one of the systems I'm working on called the full spectrum system. And so I will draw this right across here. Pretty much aligns right with this low here. So these rejection points act as support and resistance. Okay. And now you can see hourly. So let's take a look here. We have our peak. We come back down. Okay. And we can actually see this as flagging. So let me redo this because it's tight, but it's hourly. So here's our peak. Here's our move down. Here's our flag, excess phase peak. Here's our breakdown of the flag into our consolidation level here. This is our consolidation level. Here's our breakdown to the ultimate low. Okay, perfect. Nice, perfect cycle phase, complete 5-cycle or 5-phase excess phase peak pattern to the upside. We come down here to the low, we move up, we flag down. We're now in that breakaway phase. We are going to be looking for this move to come up, try to find some consolidation, hypothetically around this area, consolidating around this area, and then maybe try to get to an ultimate high. And that would be the next phase of this move. The next phase of this move to the upside is going to be, like I suggested, to the upside, and is going to be attempting to break through from this flag right here up into consolidation. Now, where would consolidation be? Okay, well, consolidation, you know, maybe here, or most likely, I'll be honest with you, right in this area. So most likely, this is going to break and consolidate right in this area before breaking up to the ultimate high, probably in this area. So I don't know if that's clear for you guys. I'm trying to make them different colors, make it a light yellow. But the excess phase peak patterns indicating that Bitcoin is now complete to the downside with this ultimate low. And we are now flagging into this move into consolidation. I mean, I could argue this is a tiny little flag and this is consolidation, but I'm going to refer to this as the bigger flag, moving into consolidation, moving into an ultimate high. And then at that point, it'll roll over again and consolidate all the way out here to approximately October 2nd or so, or sorry, November 2nd, before it flags out. Okay, a little long this morning. I'm going to go back to work and get my cup of coffee. Again, you know, private message me. If you want to know more, private message me. That's the easiest way to do it, trying to respect the trading view rules and just understand that there are rules. I could show you more, but I would be at risk of breaking the rules, and I don't want to do that. Okay, so that's it. Go get some today. We'll talk later.